Hello, everyone. Welcome to the ESS BIZTOOLS Black Friday Systemising Business Advisory Services. My name's Peter Towers. I'm the Managing Director of ESS BIZTOOLS. For this webinar session, I'm joined by Paul Barnaby, the Regional Integration Consultant, Asia Pacific for Plan Guru, and CEO of Beyond Accounting Technologies. How are you today, Paul?
I am just great. Thanks, Peter.
That's good. Welcome to this ongoing series of webinars. We've already had 3, so this is the 4th one today. We started bright and early, and hopefully we're able to communicate to the accountancy profession the benefits of utilising a product like ESS BIZTOOLS to deliver business advisory services to clients. The key theme, Paul, is to emphasise that we have some systems introduced in every one of our 32 product packages. And I know you're a great system fan, as wearing your dual hats, of course, as the Australasian or the Asia Pacific representative for Plan Guru, who make some great budget and cash flow software, don't they?
Exactly, they do.
Okay, so we might just go back and get started as we work our way through the subjects that we've selected for this session. The first one is within ESS BIZTOOLS, we have the forms for cash flow management. And so we got a cash flow cycle chart. We got one for retailers and manufacturers and stock matrix and key performance indicator ratios. And so, Paul, these sort of forms you're a budget and a cash flow expert. You see that they're necessary for people to have an understanding and be able to explain to clients just how.
Well, I think it goes back to your
all come together.
I think it goes back to your opening remarks. There's got to be a system. If a pilot was to try and take a plane off the tarmac and fly it into the air without a system, it would be pretty chaotic, wouldn't it?
Yes.
But many accountants drive these sort of services without any system whatsoever. So if there's documentation, when I was in general practice, and in fact currently, I still work on documents as the guide to leading you through that process, because that's what it's all about. It's a process that is, you are engaging with your client. So you need that systemization, you need the forms, you need ESS BIZTOOLS, Peter.
Yeah, thank you. Okay, we might just go to the next one so we can, because I really want you to go through the predictive accounting a little bit later. One of the products which we have in ESS BIZTOOLS is the Tradies Charge Out Rate Calculator. Around Australia, there are thousands of tradies, and because of changes in workplace relations over the last 20 years, a lot of them left paid employment in bigger companies and started their own businesses. And that meant they had to determine what they were going to charge, how they were going to lead their teams, what charge out times they were going to achieve from their previous various team members. So we're put together a package that the accountant can work through based on the financial position that affects that particular tradie business. So that's looking at the team member salaries and wages, the labor on costs that apply, the expected productivity, and sometimes people will give you very high figures that you might have to challenge them to say, well, are you sure you're going to get that? Training hours need to be taken into account. External purchases markup. I find that's a variable figure, Mark. You know, some people will tell you they're going to get 20%, but then you look at the end of the year and they're lucky to get 5% because they don't apply the markup to everything. The overhead budget and the targeted profit. That's all put together in an Excel spreadsheet for this calculation, the way we've done it, and it comes up with charge out rates for each individual business. Do you think that's a beneficial product for accountants to be producing for their clients?
Oh, absolutely right, Peter. And the last comment you made was you've reduced that or produced that into an Excel format, and we can use that in the predictive accounting by linking to that Excel file to take that data and translate that into the budgets. Income, for example.
Yep.
Look at all the productivity. Look at all the charge out rates. What does that translate to revenue, either for that particular cost center or business or even individual? But then link that through to your budgets and cash flow forecast. So great idea, Peter.
Yeah, yeah, very, very important, because I talk to some of the tradies at times that I play golf with, and I say, how do you work out what you're going to charge out at? Or well, I took what my old boss used to charge, and I said, how long since you work for a boss? Oh, 10 years ago. I said, okay. Well, what about your costs? Oh, yeah, but no one's ever shown me how to do that. Is the normal sort of comment. And so things have changed, haven't they? And there's some very smart tradies out there, don't get me wrong, and there's some people that do it very well, of course. I can remember going to a meeting years ago, a bit of a conference actually, and there was an analysis in North Queensland of how many millionaire tradies there were, and they were comparing it to the professional class. And there was a lot more tradies, painters, carpenters, builders, sheet metal workers, those sort of guys that had done very well. But these things happen. So some of them had their charge out rates getting done very well. I hope an accountant was doing them for them. The next area that I wanted to just raise is something similar, and that is for professionals. And if Andrew Geddes was here, because he was on this theme a bit this morning in our second webinar, accountants should use this product for themselves first. And that's the professional service firm's charge out rate calculator. And that's where I originally got it from, to be honest, the idea, because when Geddes was at FMRC, he had this type of document on some old spreadsheet. Probably was Excel back in those days, Paul, or something that might have even preceded Excel some years ago. But he would argue that accountants should be using this sort of approach, which is basically the same as the tradies, except normally there's not a markup on external purchases. But the rest of the thing applies just as much to professions, but it applies to everyone, you know, the lawyers, barristers, architects, engineers, quantity surveyors. It's a whole range of them, probably just as many of them as what there is tradies. When you think about it, how are they setting their charge out rates? Is there any mathematical formulas around it?
Absolutely.
So we have that in the system, and people can use it to determine where they're headed. The next one I just want to raise is the retail wholesale pricing calculator. This is a little bit different, because obviously in a retail or wholesale business, we've got these various stock categories, haven't we? Whether they're stars, they're the products everyone wants to sell, but unfortunately, you're never able to have 100% of your business, or in most cases, you're not anyhow, that you're going to be selling 100% of them. There's always a need for some cash cow products, which can be big volume lines, but you don't get much of a markup. Problem stock, last year's fashion, especially when it's ladies' fashion. Last year, the color was red. This year, it's yellow. You'll have great trouble getting rid of red dresses or whatever. And then the disaster lines, the purchase that everyone blames someone else for. I've noticed some of these come back in on automatic stock reordering on computer systems. I had a client in the jewelry industry, and I was sitting in the boardroom one day doing some financial reports for them, and I heard this almighty explosion outside, voice explosion. And I knew the voice. I used to have the flat underneath this guy when I was a bachelor, and I knew what he could yell like. And I went out and said, "What's wrong with you, Jimmy?" He said, "It's taken me 2.5 years to get rid of this. We bought 20 of these. They were huge vases. This is in a jewelry business, huge vases. It's taken me 2 years to get rid of them. And I celebrated, to be honest. I bought a bottle of champagne with the girls, and he said, "There's another 20 here. Who bought it?" And what it was an automatic computer reorder that had got down. There was only 2 left. A very good stock control system in this business. Very good. And it did. So I keep on saying to people, some of your problem lines and your disasters can be caused through the computer system reordering. So people need to look at that. But what this system does is it allows you to sit down and configure with your client the types of stock they're buying and what markups they might be able to get, because at the end of the day, they got their overheads, which include labor, of course. We're not charging labor separately in a retail or wholesale environment, and what their targeted profit is. I can remember using this approach when I was in the meat industry with retail butcher shops, trying to work out what they should be doing, because we found we had a shop selling 10 grand's worth of meat a week, but we weren't making any money because they were selling all the special items. The public would come, and you've got to get smarter. Then you've got to mix it up a bit and maneuver things around. So you looked at products like that in the past to try to help retailers?
Oh, indeed, I have, Peter. I had a mixture of clients in my general practice, from retailers through to wholesalers and, in fact, manufacturers. So you've really got to be equipped, and again, system-wise, to look after all industries. And one of the keys to business advisory services is learning exactly what makes your client's business tick. And if it's a butcher that's doing 10,000 a week but not making any money, what are we going to do about it? How are we going to do it? What will be the steps that would be taken? Maybe it's some specials that have got a higher margin.
Yeah.
So really, it applies right across all industries.
And the message we're trying to give to accountants in all this is, if you're going to be offering business advisory services, you've got to dig into what's going on in your client's business. Whereas if you've traditionally only been preparing the P&L and the balance sheet and the tax return, you're not really getting involved in the nitty-gritty of what's going on, are you?
No, absolutely not.
And that, so it's this what if assessment that I think is very important, that you're able to be sitting down and talking to your client, and it's enabling the accountant to be there as a key commercial advisor, which I think is a better description of what the modern accountant should be describing themselves as might be performing a chief financial officer role, but really what the client's interested in is your commercial nous that you're able to contribute.
I couldn't agree more, because, and you mentioned the words "what if." It's very important that you can sit with your client and say, what if we change that? What would be the result? And show them the result. This is what it would look like. And often their eyes go through the roof. How can that be? Well, that's the effect of the change. We've measured the effect of you making that strategic change that will improve, and here's the level of the improvement. Your profit's going to go up 50%. Your cash flow is going to improve X amount. Your own earnings can increase. Would that be a good idea? Too damn right it would be a good idea.
Yeah, that's right.
So what if is very important.
Okay. So, and obviously then they can develop a financial plan. So these products, which are the ones we've just gone through, are part of the ESS BIZTOOLS system. They're there. And as you mentioned earlier, they can be linked from the Excel spreadsheets into predictive accounting. And on that note, we might move into an overview of this concept called predictive accounting.
Sure.
And now, first of all, I've got there that predictive accounting's been developed as a joint venture between the company you represent in Asia Pacific, Plain Guru, your own business, Beyond Accounting Technologies, and ESS BIZTOOLS. So ESS has included the 3 packages we've already mentioned in the special predictive accounting package. And then we get into what's included. So key drivers, budgets for individual business units, cash flow forecasts, and projected balance sheets. Now, Paul, you're an expert in all this on predictive accounting.
Yep.
And, I'd invite you to make your give your overview comments. Thanks.
Okay, all right. Well, maybe I could start by just defining predictive accounting. And predictive accounting is nothing more or less than doing for future accounting periods what we're all trained to do in the past, but have tools like MyOb, Excel, et cetera, to do. And so what we need to do is we need to translate the current scenario or even the projected scenario for a particular business into those financial statements, but with one very important addition, and that's called the cash flow forecast. And this is why systemizing this area has been extremely difficult for accountants, because to do that, they have looked around and said, well, we can't use Xero for that. We can't use QuickBooks for that because it just doesn't do it. Some people would have me believe that there are budgets within those products. Well, there might be budget fields in which you can put a number, but what the heck's the use of a number unless there's something that supports that? So that's the concept of predictive accounting. Future financial reports, same as the historic ones, but with the important addition of cash flow, all linked in, often called three-way reporting, because the cash flow, balance sheet, and profit and loss are all inextricably linked. If you make a change to one, there will be a probable change to the other two. So if you make a change to your profit and loss, surely there will be a balance sheet change and probably a cash flow change. It depends.
That happens in actual practice too, doesn't it, of course?
Exactly right. Exactly right. But the difference is that when you look at historic financial statements, the cash flow is just what ends up in the bank. How it got there, why it got there, what drove it there, are my terms, is anybody's guess. That's the science of predictive accounting. I know when I look at any set of predictive financial statements, I know what's driven that cash flow. I can do it line by line and explain it to the client. How many accountants do that?
Well, so it all starts with the identification of the key drivers, doesn't it?
Exactly right. And this is something I learned very early on as I was developing my skills in predictive accounting. If you do a budget that's only dollars, it is useful, yes, because at least you've got a budget in place. But if it doesn't get achieved, what went wrong? Did you, if it's a sales budget, for example, did you sell more quantity? Or did you sell at a greater price or a lower price? Who knows? And that also leads me to another point, Peter, which you and I haven't really discussed before. It's so important in business advisory and particularly predictive accounting for the historic systems to be properly set up. If you've only got one revenue line in Xero or MyOb or QuickBooks or whatever it is, you're never going to get any detail because it'll only be one revenue line. You've got to break it down. And while that can be a little bit of a pain, often when I do a consulting review, that's what I find. I find that the data coming out of the GL or ERP system isn't sufficiently detailed to help build those drivers.
And that's because the key thinking in the preparation of annual accounts is basically driven by taxation.
Exactly right.
The tax office don't ask you to segregate your sales.
No.
But it's very important when you're doing budgets, isn't it?
Yep, absolutely. And that goes across a company, but it can also go down into a branch or a business unit. And this is why having purpose-built tools like Plan Guru is so important, because you try and do a multi-level budget. Let's say there's 30 different business units in a business that's doing less than, say, $10 million. That is an enormously time-consuming exercise, if you're using something like Excel, to build 30 different budgets, then consolidate them, and then hope like hell there's no errors in it, which is a 90% chance that there is.
Yeah.
And so this is why you've got to get down to that level of detail, but don't be daunted by that. Look for the systemization again that helps you do that on the back of your hand. Now, 30,
sorry.
I was just going to say 30 business units, 30 different files will take probably 5 minutes to consolidate. It could be in different countries with different exchange rates. You know, this is the sort of detail that you've got to get into.
And you set all this up in your key drivers to start with, don't you? You're breaking down these units, and so that you are doing your calculations as such, not within the budget or the cash flow forecast. It's then the key information's been transferred in.
That's right, but it might also be contained within the tool. Again, Plan Guru has an extraordinary ability to build in detail to support, for example, units and price calculations. Simple one, I'm going to sell 1,000 units a month at $20 each. There's the sales budget per month, $20,000. And then you can do the what ifs. What about if I made it $25? What about if the cost changed? Those are the sort of things you can do.
Okay. So obviously your example of 30 business units is saying that you can have as many budget unit calculations as suits the business.
Absolutely right.
This is one of my pet hates with annual financial accounts, that a business has got 4 or 5. We'll bring it down from 30, but even obviously 30, but 4 or 5 business units and everything's lumped together in one P&L account. It might be all right for the tax office, but it's really not giving management control over what's happening in that business, is it? Because they haven't got any individual figures where they might have different management people looking after different components. They've broken it down, first of all, in the budget, and then in the actual profit and loss accounts, where they've got profit and loss accounts for each activity. There's far more chance of realistic allocation of responsibility, isn't there?
Oh, absolutely. It goes a little further than that, Peter. It's accountability. Because if your budgets are properly set up down to the most ideal level of detail, and the manager of that particular business unit says, I'm going to have this level of staff to manage that level of revenue, and that is exceeded, again, what went wrong? And so that puts the accountability back to the manager to say, well, look, it's fair enough that you actually got your estimate wrong, but can we analyze this and see what did change? You said you were going to take 10 people, you've actually employed 14. What are the other 4 doing? Accountability. But again, coming back to that word that keeps on cropping up today and what we're talking about, systemization. What's the system? Again, if you've just got dollars for that staff budget, who knows what went wrong? You might have employed half the number of people at twice the salary.
Yeah.
But they might have been twice as good. Who knows?
Before we go too deep into the budget and even the key drivers, can I go back a step? Because I've already had a webinar today with Andrew Geddes, and we're talking about business plans. And we made the comment then, and I said to Andrew, well, you're going to be talking later on in the day, and I'm sure it will come up. So I'll bring it up now, because otherwise he will ask me why I didn't when he listens to the recording. I see that the process that should be adopted, that unfortunately I don't think a lot of accountants are doing, and that is the business plan is prepared first. It outlines the strategy. It outlines what the business is trying to achieve. And invariably, there's various forecasts made in that. And then it's all basically got to be financially proven within this predictive accounting process. Budgets, cash, or identification of the key drivers, some of which would have been mentioned in the business plan. This is what we're going to do. And then what's the financial reality out of that, incorporated within various budgets? Do you agree that it does go back to the business plan?
I do agree. And as you yourself have observed, Peter, there have been examples that we've all seen in reality where the budget doesn't exactly tie up with the business plan.
We talked about one of them earlier.
Yes.
Andrew. Yeah.
And so it's most important that it all flows through from the original business plan through to the budgets and obviously the whole predictive accounting format. So yeah, you're quite right. It starts with the business plan. And here's the other issue that I have a bit of a hobby horse on. too many accountants don't involve their client in that process. They write a business plan for them and present it to them and say, there's your business plan. And the client looks at it and says, well, this makes absolutely no sense to me at all, because they haven't communicated, they haven't talked to. And that I think, comes back to our training and what we've been used to doing. And often those business plans and budgets, predictive accounting, is externally driven. The bank rings up on Friday and says, we need a budget and business plan by Tuesday afternoon. So has the accountant got time to go and spend 3 days nutting all this out with the client? No way. And that is one of the things that I've seen so many times over the years, just not enough involvement between the advisor and the client to develop that whole business plan and then later translate that to the financial aspects, including the predictive accounting.
There's got to be ownership, hasn't there? The ownership by the accountant if they're preparing it, but also most importantly, the client. The client's got to be able to hand on heart say, yeah, that's my business plan. And I'm going to, because he's the one that's going to have to implement it, he and his leadership team. And in fact, I think that our comments should extend to the leadership team. They should be sitting there, hand on heart, saying, yeah, this is our business plan. We accept that. And I do a fair bit of business planning work, and I really look forward to some robust discussions at times where the leadership team want to change the business plan. I applaud that because they're reading it, they're thinking about it.
Absolutely, I couldn't agree more. Geez,
he's put all this in there. These blokes are going to expect us to deliver that. We better be smart enough to say, well, hang on, in some cases they're right, of course. Slip of the pencil, I say, I didn't mean to put it that 100% increase. It was only meant to be 30% or whatever. But the leadership team needs to understand what's in that business plan. And then they need to also be able to follow through what's going into the budget process also. What is in these key drivers? Do they agree with it? And this gets back to manpower in various functions, doesn't it?
Absolutely.
So they might say, no, we need 6 people there. You're only giving us 4 and so on. So
if you're interested in a little anecdote on that topic, many years ago, I was a financial controller and company secretary for quite a major company in New Zealand. And young and green was I. And although I could prepare budgets, I wasn't involving the key management team in those budgets. And the marketing manager particularly got very, very angry about that. Didn't say anything, but he'd attend a budget meeting and he'd sit there like a stuck dummy because he was just hating what was going on. And it took me a long while to realize the mistake that I was making. And one day when he stormed out of a meeting because he was that cross, I thought, come on, Paul, it's time to do something about this. What am I doing wrong? And I suddenly realized what it was. And I went down to Jack's office, shut the door. Can I have a quick chat, Jack? He said, of course you can. I said, I have a huge apology to make to you. He said, what's that? I said, I've been doing your marketing budget for the last year, but I haven't involved you. Now, don't you think that might have been fairly important? My apologies. From now, you tell me what's going in your budget. We'll nut it out together. Did we become best buddies? Absolutely. Did we get a good budget? Absolutely. Lifetime lesson, Peter. Lifetime lesson.
Very important. That key ownership, isn't it?
Absolutely. Yep.
He then owned it. And he would have told everyone it was his budget. He prepared it. Yep. You just the scribe that put it into place. That's really should be the feeling that the key leadership team people have got, I think.
Quite right. And that's fine. That's absolutely fine. Because they can't do the scribing, they can't put it in, they can't translate that into the financial statements. We can, but if they own it, then how much more successful is that going to be?
We've basically talked about key drivers and the budgets for individual business units. The cash flow forecast, is there anything in particular there? Obviously, it's going to show some warning signs, isn't it? The business is going to run out of money because they're growing and they're tying money up in debtors and stock and perhaps some new factory improvements. What about identifying they need new loans or perhaps some new capital? Maybe that type of trigger is going to start coming out of the cash flow forecast, isn't it?
Indeed it is, because what you do is because you're producing balance sheets, you're including in your predictions all the current funding facilities. Now, if they happen to be insufficient, the cash flow result will soon identify that. For example, if you've got an overdraft with a limit of $1 million, then the tools you're using should identify that when you reach that $1 million, it immediately raises a red flag and said, this is a deficit now. We've got a deficit to cover. It might be another $500,000. What do you do? Do you go to the bank and say, could we increase the overdraft because it looks as though it's temporary? Or does it identify a permanent and long-term requirement, in which case we might need some additional loan finance? Or, as you correctly say, do we need some more equity? Would that be the better way of doing it? Again, it comes back to the what if. What if we did this? What would be the outcome?
Okay, so that's the budget process. So it's most definitely not, we're not saying to accountants, go off and sit down and do these budgets, cash flow forecast, projected balance sheets on your own in isolation. We're saying that you need to work it through with your client and communicate with them and get some feedback. It's very difficult in my mind to think you're going to do this in 2 or 3 days, just because the bank's asked for it. The response probably should be, no, it's going to take us a week because we need the client to be involved. And the client's flat out on Monday, Tuesday, Wednesday, so we can't do it until Thursday. And by the time we get it to you, it's going to be the following Monday. Just tell them, this is not a job that we're just going to pluck figures out of the air. We want some reality to all this, so that we're able to really have this ownership.
Yeah, absolutely. And that again comes back to that systemization. If the systemization is there to make certain that ownership is in the right categories or areas, then it will work. And you're quite right, you can't do it in 2 days if it's going to take 5.
Okay. Quite separate to what we're talking about in our Black Friday specials at present, we have a great product in this predictive accounting package, which is the joint venture between Plan Guru, Beyond Accounting Technologies, and ESS BIZTOOLS. And the big offer there is from Plan Guru, isn't it, on the number of clients that an accountant could have utilizing the system for an initial charge. Do you just want to talk to us about that?
Yes, I certainly will. Plan Guru for advisors and accountants in practice is based on unlimited user licenses. So if you've got 15 staff in your business advisory unit, you can have 15 separate licenses, and if you wish, 15 separate client databases for no extra charge other than the base charge for that firm. What drives the difference in Plan Guru is the number of clients that are on board, and a core license for Plan Guru includes 3 clients. Now that doesn't sound like very many, and of course you'd use more. And the additional clients come at around $30 US per month per client. So it's not a big deal, but the offer that Plan Guru have made is that they will deliver Plan Guru into the ESS BIZTOOLS Beyond Accounting Plan Guru Consortium. They will deliver it with 10 clients. So that is quite a significant discount, over $200 a month, $2,500 US per annum. Quite a significant contribution that Plan Guru are making towards that joint venture.
Yeah, that's right, and that's very good. And people who subscribe to that joint venture predictive accounting package, they also receive services from you, from Beyond Accounting Technologies.
Indeed, they do. It's a full implementation package. It's not a public issue. It's one-on-one. So it's my company consulting direct with the advisory firm, and if necessary, we can do case study material based on their own clients. And I will indeed train and implement including their staff. And my contribution to the cost is, my cost is fixed, but the ongoing is unfixed. In other words, my contribution is ongoing support for as long as they need it on the whole predictive accounting area. They can ring me up anytime, ask me specific questions about client scenarios or what have you. And of course, as you're about to add, there is all the systemization on predictive accounting that's provided by ESS BIZTOOLS.
That's right. So that covers the material we've already spoke about. So if anyone's interested, and hopefully they are, in thinking that we're about to start a new calendar year, great time for doing budgets and cash flows and projected balance sheets, they can contact you, Paul, or contact me. And,
absolutely.
We will then talk to them. So do you want to give them your number so they can ring you?
Certainly, I don't think it's on screen, but it's 0411 214471. Give me a call. Happy to have a chat.
Okay, so thank you very much, Paul. I'm just going to flick through now and do our Black Friday promotion. Seeing it is Black Friday, and
busy Friday.
Busy Friday, yeah. This was a good idea when we thought about it. I'm going to be pretty weary. I got a board meeting starting 20 minutes after we finish this today.
Oh dear.
So I'm living on Zoom today. Black Friday, end of lockdowns. That's the other big thing to celebrate. That's probably the big thing to celebrate, isn't it?
Absolutely.
These lockdowns are coming down. We did have a special on offer for our two main products, Advanced and Business Advisory Services Starter Package of 50% in both cases. They're listed there, but we've now extended that to every one of our products. So our web consultants gone on and manipulated so that if you go on to buy anything, you'll get it at a 50% discount from the price that's shown there. And they're available now until Monday, the 6th of December. If you want to talk to Paul or I about the predictive accounting package, please contact us and we will talk to you about that. That predictive accounting is not included in this particular promotional offer, but they're the ones that are there for the ESS BIZTOOLS products and ESS BIZ grants. So if you want to be able to ascertain grants a lot better. Now I'm just going to go through, Paul Barnaby. We've also got some special offers from our affiliates. And Paul, do you want to just run through the offer that you've proposed, thanks, or making?
Certainly I will. Often what happens in an accounting firm is, as we said right at the outset, there is no systemization. Often there's no tools to speak of other than things like Excel. So I will do a one-on-one consultation and prepare a report looking at all the facilities within the firm, the staff capability, what experience have they got in predictive accounting? Often it's little or none. What are the tools and software employed? Often it can be the wrong ones, even though they've got tools, so I do a review on that. What marketing are they doing? And how are they taking that to their clients? Now, normally that would have a fee of around $700. I'm doing that at no charge.
Okay, well, thank you very much, Paul. And I'll just go through these other affiliate offers. Amanda Gascoigne, who was the speaker before Paul today in our previous webinar, she is an expert in small and solo accounting firms. The first 10 firms that subscribe, if you wish to go into solo and small practice coaching session, she will be welcoming you into that for no charge. Cloud9 Associates, Priscilla B. Smith, who's our next keynote presenter. She has an offer for 5 firms for a CPD hours at a discount promotion. If you give them the review at the end of the course, they will refund your fee of $214.66. Mark Holton is from Smith Inc. Long last, their young conference is being held at the Gold Coast in February. It's been postponed twice because of COVID. And there is a special offer there. You get the original early subscribers discount. If you go onto our website, you'll get the details because there's a special email address for you to log on to get the benefit of that offer. Jordan Lowry's from Blackstone Business Group. He's an expert in human resources and workplace health and safety. And he's got a package, a discount relating to the employment contract package for $399. And Brad Smart is a communication expert. And he believes that accountants can improve their performance in this very important area of communicating with clients and prospects. So he's happy to write for the first 10 firms that contact him after subscribing to an ESS BIZTOOLS product, a press release or a social media release or a blog article or something along those lines. You can talk to him about that. So they're the offers that have been made by our affiliates, and we thank them for that. There's the contact details if you need to contact me. But please go to our new website, www.essbiztools.com.au, where you can have a good look. Paul, thank you very much for joining us for this session today. I look forward to working with you, of course, in the future. But this whole area of budgets and cash flows and predicted balance sheets is very important. And for everyone, we need to remember there's a new calendar year about to start.
Absolutely. Thank you very much, Peter. I've enjoyed the debate this morning.
Okay. Thank you very much. Have a great day, Paul.
Okay.
Bye.
Cheers now.
Thank you. Bye.